What if I told you that big part of Tesla's business is about to go through the roof and almost all analysts and regular investors are ignoring it? Tesla Energy and the industry in question, and many Tesla shareholders are particularly interested in the vehicle division. But most analysts only consider projection for the following 5 to 10 years of output and distribution. Until recently, Tesla Energy was mainly disregarded. In all fairness, it's no surprise that this has remained a relatively unmoving cog in Tesla's machine for so long. So, Tesla Energy market is projected to eventually rival the automobile industry, and the energy market is so huge potential as seen by the participation of some of the world's top corporations. And that's exactly what we're going to talk about in this video. Now, this last quarter marked the beginning of Tesla Energy's exponential growth trajectory, which is expected to eventually rival that of the vehicle division. The question of why energy has remained so static for so long is essential to answering why it is about to burst. Over the past few years, Tesla has made it quite apparent that they place a premium on material restrictions related to batteries, semiconductors, and other electrical components. COVID lockdowns in China have significantly impacted Tesla and its suppliers over the past few years. And Tesla has been quite forthright about the problems they experience with increasing production of the 4680 battery cells. However, it appears like everything is ending at once. Finally, in September, Tesla's Martin Viecha announced that the company finally had all the batteries and materials it needed for both the automobile side and the energy side. In addition, Elon and other Tesla representatives provided a wealth of encouraging information at the quarterly earnings call. This includes an optimistic energy forecast and rapid advancement in developing the company's 4680 battery pack. In fact, Tesla recently informed us that its energy division has achieved record sales and profitability, and they anticipate annual growth in the energy company from 150% to 200%. In only 3 months, they were able to increase 4680 battery manufacturing. More importantly, they anticipate that the Inflation Reduction Act will be such a game changer for their company that they will be eligible for all or almost all of the IRA benefits. Elon also spread his ridiculously high quantity of 1,000 gigawatt-hours of US manufacturing over the entire company. Furthermore, we will explore the significance of these figures in further detail. And just this month, Tesla announced on Instagram that its new massive facility in Lathrop, California is open now for business. The production of Tesla Megapacks account for nearly all the factory's output. A total of over 25 Megapacks are being produced every single day. Moreover, 10,000 Megapacks are projected to be produced each and every year. Now, let's take a closer look at all these figures and data we've just heard to determine the full extent of the financial benefits to Tesla. Tesla's bottom line has been significantly affected by solar energy. It's fluctuating erratically from as low as 29 to 35 megawatt hours. And then there have been times when it seems like the storage sector was finally going to develop and take off. Similar to the fourth quarter 2022, they developed 1,584 megawatt hours of storage capacity. As we move into Q1 of 2022, we see a steep decline to 464 megawatt hours of storage, or nearly half of the total 846 megawatt hours installed in Q4 of 2021. The same is true when we examine the company's revenue. It wasn't until the last couple of quarters that we saw average quarterly profits over $100 million. As for the first time ever, Tesla's energy revenue was greater than $1 billion. This was the first time the division generated more than $100 million in revenue. Elon stated that the company's energy sector is expected to develop at a rate of 150 to 200% per year, outpacing the expansion of the automobile sector. Therefore, let's assume a uniform quarterly rate of 30%, which works to an annualized rate of rise of around 186%. Energy sales would increase from $1.1 billion to $1.4 billion this quarter, $1.8 billion in Q1 2023, and $2.4 billion in Q2 2023. Furthermore, by the end of the third quarter of 2023, it will have increased to $3.1 billion. The firm's energy sector is expected to generate over $1 billion in profit over the same quarter. And for the first time ever, a 30% tax credit will be available on the storage side of the companies if you have the IRA tax credits. Since the storage portion of this tax credit previously did not exist, this is a massive deal for the company. You see, if this plant can produce 25 megapacks per day and 10,000 megapacks per year, it would have generated 40 gigawatt hours of electricity. They were able to get this facility up and running quickly, with groundbreaking occurring in September of last year and steady production beginning in January of this year. Although Austin is making great strides, this facility is still far ahead. This indicates that production at these mega factories may be increased much more rapidly than at an automobile plant. This yearly megapack output of 10,000 is well within reach during the next year to 18 months. Right now, the price of even their most affordable mega pack now exceeds $2 million. Multiplying the annual sales of mega packs by their unit price of $10,000 yields a total of $21.1 billion. Combined with output from the previous to the new plant's completion, battery storage and mega packs are expected to bring in over $24 billion annually. Last quarter, energy sales totaled $1.1 billion. So in the following 12 to 24 months, they expect their yearly sales to grow from $4.45 billion to $24 billion. Now, before we continue, I'd like to thank you for getting this far. And if you want to know more about possible tax credits, then make sure to stick till the end. Furthermore, the new IRA electric vehicle tax credit has ramifications for tax incentives in the automobile sector compared to the tax credit already in effect for battery storage. So, if current projections hold, Tesla will sell around 550,000 Model 3 and Model Y automobiles in the United States in 2023. If they successfully claim the full $7,500 EV tax credit in 2023, the automotive division will gain $4.1 billion in incentives. However, for the sake of comparison, let's look at that $4.1 billion in the battery storage side. So, taking into account the $24 billion in annual revenue, the target number from 10,000 mega packs per year at the new California facility, and the roughly $2.8 billion in currently capacity, and multiplying that by 30% tax credit, we get $7.2 billion in potential tax credit and incentives that Tesla has never had before. Clear now how much the IRA will change things on this end of the company. Furthermore, there's been a massive backlog on this end of the company. Therefore, there's been no problem with demand. However, this allowed Tesla to set its own prices, and it will likely do so over the next several years as it has in the past years. Now, this ridiculous sum that Elon tossed out there is the last thing I want to examine. That's 1,000 gigawatt-hour or 1 year's worth of output, and the company is working at full speed to reach that target in the United States. Let's assume that 500 gigawatt-hours is used to power vehicles and another 500 gigawatt-hours is used to power homes and businesses. There's a 50-50% split, and the two halves of the firm exert roughly the same amount of effort. The automotive division will be able to produce between 13 and 14 million vehicles, much over the 20 million cars that have been discussed as a long-term target. In other words, the United States would have more than enough batteries to meet its annual vehicle manufacturing quota of 500 million units if it were to reach this milestone using the power-generated batteries. And we know that the 10,000 mega packs can be produced by this new California plant equate to 40 gigawatt-hours of electricity. So, if 500 gigawatt-hours is Tesla's target, dividing by 40 yields a number that is 12.5 times larger than the California plant. In addition, 12,000 times 12,000 is 125,000 mega packs. The average value of a mega pack is $2.1 million. With this in mind, 125 mega packs may generate $262,500,000 in sales. The IRA tax benefit of 30% applied to the sum is mind-boggling. So, the time has come to focus on this facet of Tesla's operations. If you are a Tesla stockholder who is feeling uncertain right now since the stock price is down, remember that most experts do not even include this in their calculations. They are only concerned with output, shipment, price, and profit. And experts believe that beginning in 2023, analysts will no longer be able to overlook the near-term upside in this energy industry. So, what do you think of this terrific news? Let me know what you think in the comment section below. And while you're at it, make sure to smash the like and subscribe buttons as well. Now, if you want to know more about Tesla's battery tech, then make sure to click and watch this video right here and enjoy. And that's the end of this video, guys. See you next time.